Hey, if you wanted to hear how Sarah booked 20 appointments this week with past clients, you're listening to the Loan Officer Leadership Podcast. I am your host, Steve Kiles, and we're excited because this morning, one of the things I'm going to do, Sarah, it's good to have you, by the way. Good to see you,
Thank
girl.
you. Good to be
Um,
here.
Hey, so it's Loan Officer Leadership Podcast powered by the Mortgage Marketing Animals. And I'm really excited about today's podcast. I told Sarah we got to jump on a podcast. If you listen to this last episode, episode 311, I did a podcast with our good friend Greg Morga, it's a Freedom Club member. It was episode 311, Refinance Boom. And Greg hit me up on a text, I don't know, back in December and said, Steve, you will not believe what I'm doing right now to start teeing up these refis. And so we put him on a podcast. And then literally, I was telling Sarah, this is one of the best strategies I've heard. Hey, take a listen to it. And then Sarah and I literally said, okay, how do we build a plan? It goes back to, we talk about it all the time, Sarah. Clarity comes in action. And so we're like, okay, we're going to implement it. It's going to be a little bit messy. And here are the results. So what we did was we started going through and calling our past clients. And together we probably have, I don't know, 1,000, 1,500 or more past clients. Sarah made 43 outbound calls. And she talked to 20 of our past clients. And this was literally today as we're recording, we're sitting here, it's Thursday morning. So Tuesday and Wednesday. So within 2 days of phone calls, outbound called 43 people. Sarah, you talked to 20 of them, and all 20 of them booked in for an annual mortgage review, right?
That's right.
And then out of the 20, you've already met with eight. So in 2 days, you called 43, you only talked to 20, you booked 20 of them. You've already had eight annual mortgage reviews, which are 30-minute loan consultations. And we're going to talk about how to put them in your calendar. And listen to this, everybody. Five of the eight have rescheduled for a refinance consultation. And we're calling those a refinance ready consultation. And so we're talking about, Sarah, 62% of the people you've done a mortgage review with booked into a second follow-up because they said, hey, a refinance actually might make a lot of sense for me. What
Right.
the heck, girl?
Yeah, I know. It's exciting. And when I heard the podcast with you and Greg, I was
Yeah.
like, it was a Friday afternoon, I think, and I didn't have the bandwidth or the capacity to make the phone calls, but I was like, I cannot wait. And it started on Monday
Yeah.
because I just was like chomping at the bit to get
Yeah.
started. And I knew the strategy was fire. I knew when I heard it, I was like, oh my gosh,
Yeah. It's
Greg
good.
is brilliant. I can't wait to start doing this. And I think that sometimes the trepidation on making those Wednesday database calls, if you're part of the mortgage marketing animals and you're making the daily success plan calls, and Wednesdays is a funny day for a lot of those of us who have been in the business for a long time because we have this anxiety of the fact that people think that we should have been calling them already
Oh,
and that
yeah.
we haven't. And it's this weird thing that we
Yeah.
all go through that we're like, oh man, I don't want to call them.
So
Fill
funny.
in the blank. We lie to ourselves. We talk ourselves off the fence about, or talk ourselves off the ledge of like fear. And this just completely dispelled that because I called saying, and on some of those calls, yeah, they were your previous clients.
Yeah.
They didn't know me from Adam,
Yeah.
but what they did know is that I know their name, I know their address, I know that we did the transaction for them. So this kind of leads to the fact that you could call on somebody else's behalf. It was very simple.
Yeah.
And I had the same results.
Yeah.
Anybody in your database, Steve, that I called
Yeah.
booked an appointment with me. I had one
Yeah.
person push back, and that was a lot of fun. We talked about that. But other than that, everyone booked
Yeah.
because they knew they would be foolish to not do this. And so,
Hey,
yeah,
let's bounce that back and forth real quick because first off, when we're talking about building your business, because a lot of loan officers are rebuilding, the two easiest areas and how do you get the most traction? And you and I've been talking about it. We got a great group here that's a part of our network that we literally have linked arms with. And what we've been talking about is number one, it's realtors. they're the number one source of relationally referred leads. So we want to make sure we're going after qualified agents. We're waking up old relationships because our processes remove chaos. They need us, and it's a great opportunity. Number two, which has been the sleeping giant, is what you and I are focused on right now, is the database. And when Greg, we did that podcast, and he's been a friend for a long time, but when Greg, we were talking, I just remember saying, dude, this is an untapped opportunity, because here was the difference, Sarah. He wasn't just making his database calls, but what he really opened up on the podcast and through our friendship. And this is why it's so important to be a part of something like the Mortgage Marketing Animals and the Freedom Club, is because it's in collaboration we get better. But Sarah, the linchpin for us, because we've been calling our database. So
Yeah,
just how our team's structured, Sarah is literally the boots on the ground. So I'm the vision, strategy, structure, and Sarah, actually, her and Karina and the team, they get it done. And we're sitting there talking. We do our database calls, but it's the fact of booking people into an annual mortgage review
that's
so
it.
that we can help them examine if there's any additional savings. And that one piece, here's the difference is, you're able to identify who is really a good candidate for a Refi Ready consultation. So step one, let's see if we can help you get some savings and at least have a consultation to make sure you're in the right spot. And then if we uncover a need and a refinance may make sense, that's where we move them into what we call the second appointment. So it's a stair step approach. You're not everybody's going to refi. It's a value add. Let's see if your taxes are right, your insurance is right, your monthly payments right, and talk about your debt structure. And then we're able to move them into, oh my gosh, I wasn't even thinking about it, but maybe a refinance makes sense. Let's schedule a refinance ready consultation. And then that's where you complete the application, review credit, and gather documents, so that we're building a pipeline that when the right payment hits and the markets continue to get better, we're ready to take advantage of all these refis. That was the difference. It was like, holy cow, it won't be, let's go get them ready.
Yeah.
We're going to have a pipeline. Look, this is our first week. And if we continue with a 62%, you and I were talking about it, we'll have 12 families already in a refinance ready position just by doing 20 loan mortgage annual mortgage reviews this week. And our goal is just to continue to do 20 every single week. So,
Hmm.
dude, what a great strategy.
It is, and the brilliance behind it is the Trojan horse
Yeah.
of, I am here to serve you. I am
Yeah.
here to, and you know what? It's not even a Trojan horse. It really is. That really is our heart, is to
Yeah.
serve others, and it's to
Yeah.
serve our community. It's to serve, I've been telling people this now. I was at a networking group this morning already, and we were talking about it, and they said, hey, what can we do for you, Sarah? How can we help you with your business? I said, all y'all that are in here, let me take a look and do your mortgage annual mortgage review.
Yeah.
Let me talk to you about it, because it doesn't have to be me who did the loan. Like, now I'm looking for
Mhm.
opportunities, and this
Yeah.
is not salesy. I don't ever consider myself as a salesy kind of loan officer, and I think a lot of people can resonate with that within our
Yeah.
industry, and especially a part of the MMA, because we try to bring value to every part of our business. And that's where I like immediately like hung on to it when
Yeah.
Greg talked about how he approached it. And there's so many, please listen to Steve's podcast. If you're listening to this first, go back, like hit pause and go back and listen to the message, because that's really where I hung on to, is the fact that we're preparing them now. It's activating the reticular activator
That's
in
it.
people's mind to
Hmm.
say, refinance, I need to call my loan officer. Refi, I gotta go back. I gotta go back, because somebody that I did talk to this week, who's a Refi Ready, she told me, she's like, well, it looks like it might be a good opportunity for me to refinance right now, because my existing lender just called me. And then, I think I'm going to call my credit union just to check it out and see if there's any opportunities with them. And I was like, hello, I can help you too. And I didn't call her. They
Yeah.
called her before I did. So
Yeah.
she wasn't thinking about that, right? And that's what Greg was talking about, is just being top of mind, being the first ones to the punch. It doesn't matter when you're listening to this, though, do it now. Don't kick yourself for not doing it in January.
If we think that they're not already being called by their servicers, they are. And so I can promise you this, there's a ton of people going to be calling. And what we're trying to do is this: build a pipeline that's refi ready. And what that means is hey, we did our annual mortgage review, and these names are very specific. And here's where I want our listeners to really understand. When Sarah and I started it, we just heard what Greg said on the weekend, and we did it messy.
Yeah.
So it's like, okay, here's what we're going to do. We got a lot of past clients, and I love what you said too, and I don't want to skip over it. I don't call my past clients anymore. Sarah calls them. Well, Sarah's never talked to any of my past clients ever. And she was able to get the same results from my past clients as she did from hers.
Right.
And we both have a tremendous book. So it's really not even, you can have it done effectively for you on your behalf. The key is an annual mortgage review for savings. The purpose of the call is to check in. We'd love to help you with an annual mortgage review. We're constantly looking for ways to serve you and your family. And oftentimes there's an ability to save money in taxes, insurance, escrows, and making sure your monthly payment and debt structure are correct. That's a 30-minute consultation. And Sarah, we fall within the same consultation structure. So from 2 to 4, if you do yours from 1 to 3, it doesn't matter. We do ours from 2 to 4, and it's every 30 minutes at 2, 2:30, 3, 3:30. So our goal is to book 4 a day. And you're literally booking them just like you would a loan consultation. Then, Sarah, when you get into it, now, one thing we did do that I thought was brilliant is we tell them, hey, ahead of our annual mortgage review, go ahead and send us a copy of your mortgage statement, your tax bill, and your homeowner's insurance.
Right.
And that way we can examine and see if there's any savings, because here's a great way for you to be able to, what you're able to do, like oftentimes insurance, man, as they go up, let's get other people to evaluate it and see if there's not savings there. Escrows, are they a
Yeah.
little off? So talk about that.
Yeah, and that's something that I think really committed the folks to the call, to the appointment. I used Calendly to set up the appointment. So what I would do is I immediately went in. I do have a pre-approval specialist. Shout out to Karina, she's amazing. And I put the client on there. I put the subject line, trigger family annual mortgage review. I put the borrower's email address. I confirmed it with them before we moved forward. Told them, hey, this is what we have on file for you. Is this still correct? I'm going to send you a calendar invite. I included Karina on the invite. That's what's really nice about Calendly is I could put Karina
Yeah.
on there. And then for your previous clients, I put, team@stevecolls.com. And
Yeah.
then that way they could see, hey, this is legit. This isn't just somebody calling me out of the blue. This is something that is a real thing. And then I would also tag on there, hey, what do you need for the appointment? Please email me a copy of your mortgage statement, homeowner's insurance, and tax bill. If you cannot find these documents before our meeting, please still attend the meeting. It's going
There
to
you
be
go.
okay.
That's it.
Because I don't want that to hold them back from joining me, right? I want to make sure they don't have any reason to be like, oh, sorry, I can't come. I couldn't find my statement. No, don't
That's
worry
right.
about it. We got you. I've
That's
got
right.
your old stuff. You're my previous client. I still have your information.
Yeah.
So that's something that I think a lot of people found like, oh, okay, we're doing this. Like, this is
Yeah.
something really happening. And the other piece of it too, Stephen, this is something really important for everyone to realize in the strategy. Like, I had to stop making calls because once I booked 20, I was booked.
Yeah.
And I booked them all for the same week. That's
That
the
hey,
other
that's
thing.
hey, that now let's talk about that, because you when we were talking about, okay, what's the most effective way to do it, we both agreed, and it's proving true. And we're going to keep talking about this over the next several weeks. We'll probably do, because I think this is the Trojan horse for most loan officers who have a database. And look, if you could add 20, 30, 40 more closings in your pipeline in the next 90 to 120 days, what would your year look like? And this is the strategy that'll do it.
Yes.
And I think, that is something we talked about. Well, do you book them for next week or this week? And we've agreed that, look, the best thing is to book them the afternoon and or the next day, because the quicker they happen, the less likely they are to no show.
Correct. And I've had one person no show at this point, and that was yesterday. I mean,
Yeah.
and we followed up. We will still stay in touch. I'm going to create a video
Yep.
to send it out to the previous clients. Those who didn't
Yeah.
answer the phone, I had to leave a voicemail for.
Yep.
I'm going to come up with some solutions on that end. But I think that's really key, is that these aren't just 20 appointments set. It's going at this rate, we're at 9 appointments set. Today's Thursday, and 8
Eight showed
kept.
up. Yeah.
Yeah,
Yeah.
yeah, that's
Well, and so the
huge.
key is, okay, so you got to do it quick the same week. And then you're having, so like literally, because you've got a great, we've got a great book of business on the purchase side as well. So our goal is to fill up about, I don't know, 25 or so consultations a week, 30, somewhere in there. And you can do it if you'll do loan consultations at two to, 4 a day, and then add a couple more as needed. So, but don't push them into the next week. You're more likely to get no shows. Then when you're having an annual mortgage review, you're going over, hey, so walk me through that. What
Yeah.
is what
So
is just a kind of a high level overview of what that actual 30-minute call looks like?
when I have the appointment booked on my calendar, Karina adds the documents that they
Yep.
sent us
Yep.
already there. So I don't have to go fumbling looking for it or anything. It's right there with the appointment time. So I pull it up maybe 5-10 minutes before our meeting.
Yeah.
And I just give it a quick review. If you aren't familiar with a mortgage statement and with what that looks like, if you are new to the business and this is an unfamiliar territory for you, find a mentor, find somebody in your office who's willing to go through what, because a mortgage statement can be a little overwhelming. I mean, there are some times where you're looking at these numbers and you're like, wait, what? Like, why is this happening? What does this
Mm-hmm.
escrow balance mean?
Mm-hmm.
And that's what I'm looking for. I'm looking at the mortgage payment, obviously, to make sure everything's in line, obviously, the interest rate. Of course, I'm also looking at the escrow balance. We need to know how much money is sitting in their escrow account so we could give them a heads up if they've got a negative balance, or we can give them a heads up if they have a surplus in their
Yeah.
escrow account and alert them to the fact that, hey, this could be a benefit for you, or this could be a challenge for you in the future. So keep that in mind. I look at their homeowners insurance to talk about their deductibles. Did you realize you have a 4% deductible on
Yeah. Hey, and
unveil?
hold on. And I know, so let me just bring this up. Like I think about my sweet mom. The other day, she sent me her escrow account, and she was like, "Son, is this right? Are we doing it right?" And there's so many people when you look at it, it's like, hey, they're just not as familiar as we are. So what you're
Yeah.
doing is it's really just a simple, like in 2 or 3 minutes is you and I and anybody who's been doing this any length of time could say, well, that looks off. Or I love what you did where you said, hey, you realize I think somebody had a 3% deductible, 4% deductible. Hey, do
Hmm.
you realize if you have a catastrophe, you're going to spend 30, $40,000 before you ever get a penny? Are you okay with that? And
Right.
that's huge
It
because
is
now
huge.
you're just adding value and they may not be a refi. That's why these calls are so easy. I'm like, dude, you're just helping people.
That's it. That's all we're doing. And why would they not want to meet with us?
Yeah.
There is
Yeah.
no hesitation for them to meet with us. And here's and I okay, so we talked about mortgage statement, we talked about insurance.
Yeah.
Property taxes are a huge deal,
Oh,
especially in
yeah. Yeah.
Texas. And
Oh,
so
yeah.
this is something that I've had a lot of conversations with my clients about in the past. And so why not make this part of the conversation? So what I know how to search their property tax bill, so I don't put too much emphasis on them finding it. Most of them don't have it. So I jump into the county's website, and if you don't know how to find it, just Google whatever, Tarrant County Property Appraisal District, and you'll find it. And what we're talking about is homestead
I love it.
exemptions, over 65 exemptions. Hey, this is a VA loan. Did you get your disability? I know that you had
Mm,
some disability on there. So there is a discount because you served our country. I want to make sure that you've
yeah.
got that discount. So bringing these things up, making them aware of what's out there. And then comes the conversation of tell me about your goals. Tell me about where you're at right now.
Yeah.
And what is it that you're wanting to see with the house? Are you guys looking at maybe renovating the home? Are you looking at paying off some debt? Like, is there something else that we can do after we go through those three things? Because that's what I committed to doing with them.
Yeah.
I don't just jump into the refinance like, hey, let's look at refinancing your house. That does not come up until the very end of
Yeah.
tell me your goals. Because we have one of your previous clients who was interested in shortening. She has a 30-year term, but her interest rate is almost 8%.
Yeah.
And so
Yeah.
I said to her, I go, well, have you thought about, you're telling me right now that you're putting a bunch of money towards the principal. So
Let's
why
reduce
don't
the
we
term.
just, yeah,
Yeah.
let's reduce the
Yeah.
term. Let's
10
shorten
or
your,
15 year. Yeah.
let's look at a
That'd be
10,
good.
15 year. We're going to throw it on
Yeah.
Mortgage Coach. I'm going to meet up with her again today, this afternoon. And again, these are the opportunities we're looking for. Now, there
Hey, hold on, hold on.
are,
Let me say one thing
yeah,
because just in case you're listening and you didn't, I did a whole episode about the talking points to help get buyers and sellers off the fence back in December. So find that. But just remember this. the average homeowner in America, across
Yes,
America, has $274,000 in equity. Now, that's just the average. And that has to do with appreciation, how long they've been in the home, but they've got equity in those homes. And here's the bigger shock. And I think that this is why the annual mortgage review is important, because we are looking at making a difference in the lives of the families we serve. And in doing that, a refinance may be a solution, but we genuinely want to help clients get out of the burden of this massive amount of debt. The average household debt has $96,000, like $96,613. I mean, it's like
yeah,
nuts in consumer debt. And so part of the strategy is, hey, we want to look at the mortgage, we want to look at the taxes, we want to look at the insurance. And I'd probably say, Sarah, probably 3 or 4 out of 10, there's something that can be fixed on those. And then when you
absolutely.
get into the next stage where it's like, hey, well, let's talk about equity. Let's talk about your personal debt load. Do
Right.
you have things coming up? Is there college expense, new car expense, things that you hadn't really thought about, but a refinance may solve? And now we're becoming a solution to a family and genuinely making a massive impact in them.
Yeah.
Like,
And go ahead. Sorry.
well, because oftentimes you pay off the debt that's sitting at, like, credit card debt right now is 22, 23. Some carriers are at 27% interest. Like, they're literally just paying interest. They're not ever paying these things off. And when you pay off the consumer debt, you actually cash flow more by paying off the $3,000 to $5,000 a month they're spending in consumer debt versus taking a higher rate, grabbing the equity, paying off the debt, and the interest is tax deductible. And so it's just like it would, and I get passionate about it because
Me
it's like
too.
when well, because we're helping families. These are calls we got to be making. And the
I
results are what are
know.
so passionate because
Yeah.
look, who would have thought implementing this, you'd be 20 for 20, 20 talk tos, 20 meetings, 9 scheduled, 8 already showed up. You got 11, 12 if you can get that other one back in, and we're converting it 62% into a Refi Ready. Like, Sarah and I were talking about it literally over the next 8 weeks, and we're going to continue to document the
Yeah.
journey. We have the potential of putting, I mean, if you put 7 to 10 a week, and that's only 43 outbound calls, and you and I have well over 1,000
Oh,
together.
we have 1,500. Yeah.
Yeah, and I'm just sitting there looking. Everybody needs to be looking. You got 200 or 300. Look, let's call it 50 calls to 20 appointments. It is gangbusters. Like, that
Hmm.
is just, you're helping those families. You're setting yourself up for your best year ever.
Yes.
Okay, so well, we
Yes.
got that. And I know our time's coming to an end, but listen, tell me this. So we did the annual mortgage review. You went through, you found opportunity. Now we're getting them into a Refi Ready consultation. What does that look like?
So the consultation is also booked the same week, the next day, if possible.
Yep.
And we found the opportunities for these folks to look at benefiting from it. Everyone had a different reason, though. That's what's
Yeah.
so special about this is
Mhm.
that not one person was the same as the next. And so what I can hear somebody thinking through right now is, man, I started in 2020. No one's going to want to refinance. I started in 2021. They all got these 3% interest rates, but that goes back to what Steve was just saying about the equity that they're building and the possibilities and looking at investment, buying
Yep.
an
Yep.
investment home maybe, or keeping their existing home,
And
buying
buying the
a
next
new
one. Yeah.
primary
Yeah.
and keeping that low payment. And now look, they don't have to put 20% down. They only put 5% down on a
That's right.
conventional loan. They can even get a gift from that. I have a closing
Mhm.
today that is doing the exact same thing. He couldn't figure out how to get his next investment property. And I was like, hey, how much do you love the house that you're living in right now? Do you
Yeah.
think you'd be willing to move? And that way we can get you into a new primary. And he bought a multi-unit, renting out one side. There's a little house in the back, renting out that one, renting out his existing home. The guy netted 3 rental properties by doing this strategy.
Wow. What a
And
great.
these are the things we do as loan officers. We are
Yeah.
professionals. We're not transaction coordinators. It's not one and done. We are supposed to position ourselves as the authority on the
Yeah, you
position.
are. That's it.
We are.
Hey,
And so
hey, hold on. Let me say 2 things. So I love the strategy. Remember this: speed, time kills deals. This is something we've always said. So I love the fact that you do an annual mortgage review and very quickly get them
Yes.
rebooked, because that's really the key, because they've got an excitement. It's like, hey, I think we may be able to solve it. Let's
Hmm.
do this. The next step would be, I'm going to have Karina pull your old file and she can call you in the morning at 10 a.m. And we talked about this, scheduling 10,
Yeah.
10:30, 11, 11:30, just like we do loan consults, scheduling our pre-approval specialist to go in and call them and update their file, review credit, and begin collecting docs. Now, if you're listening, you say, I don't have any help. Awesome. Then schedule you for updating the application the next morning at 10, 10:30, 11, 11:30, or whatever time works for you, but do a scheduled call to update the app. And then you'll have to say, hey, now that I've got the information, let's make sure that we're still ready. I need a few hours to look at it for our consultation, Refi Ready consultation this afternoon at 2, 2:30, 3, or 3:30. So you still give yourself some gap and distance, because you got to look at it to make sure you can make it make sense for
Hmm.
them ahead of the consultation. So I absolutely love it.
Yeah, yeah. And resist the urge to do
Yeah,
anything right away. I had
yeah,
a few folks want to do the consultation or do their annual mortgage review on the spot, and
yeah,
I had to rein them in.
yeah.
We need to control this in a set schedule, and
I
that's what I
love it.
told them. I said I would love to do this with you right now, but I'm actually reaching out to my previous clients to get these scheduled. So
Yeah.
it would be a benefit to you if we allotted a half hour time frame for us to do that. So and if you can collect your
Mhm.
documents for me, that will help us better prepare to
I
make
love
sure
that.
that we've got you on the right track.
Hey, and let me say
So
something.
yeah.
Here's what I love with it. It's like when people want to go in, what part of what I would coach our listeners to do is, hey, if they want to say, well, let's just dive in it. Hey, listen, I completely understand we're really what, and here's the script I would use. What I typically find works best is when we have the mortgage statement, the insurance statement, and the tax bill, we can properly assess if there's any additional savings for you. So let me
Hmm.
ask you this: what would it take for you to get those to me here in the next 15 minutes? And then let's schedule you for 2:30 this afternoon. I'm going to move you to the front of the line and go.
Yeah.
So it goes back to what I typically find works best,
Hmm.
is that when we have those three pieces of information, we can properly look to assess if there's any additional savings. And I think that's where, I mean, people, it goes back to, I heard a phrase, somebody say this, they feel stupid to say no. It's like, I'm giving you the ability to look at saving money for free
Hmm.
just because you're a
Yeah.
client. So
Yeah,
I love it.
absolutely.
Okay,
A couple
so annual
things.
mortgage review into a
Yeah.
refi ready review, if it makes sense. If it doesn't, you're just very kindly saying, hey,
That's what I was about to go into. Yeah.
okay, go. So
Is
if it didn't make
and
sense, because it didn't for, a handful of them.
Yeah. So a couple of people, something that you also have to be cautious of is making sure that we aren't putting ourselves in a bad position.
Yeah,
And so, you don't want to put the cart before the horse. You want to make sure everything is good for them to move forward. One of them wanted to do a cash out refinance,
yeah,
and we've identified about 200,000 plus in equity. But the challenge that she has is she hasn't had that. She did a cash out last April. So we have to wait a year in order for her to do it again. And so I told her that. I was like, ooh, and I didn't tell her that right away. When
yeah,
she told me that's what she wanted to do, I was like, hold on, let me sit on this one for a little bit. Let's reschedule. I still
yeah,
put her on the next call.
yeah,
But then when Karina and I got together, I said, hey, let's double check our guidelines to make sure we're okay. Cause I'm pretty sure we got to wait a year.
yeah,
We do. So here's what I did though. I told her, I said, hey, we're going to put you on our calendar for March follow up and see if you still want to do this. And if you do, because she might try to sell it instead.
yeah.
If you do, then we'll be okay. But you know what? You have some other opportunities. You have some investment properties that we could look at doing a cash out refinance on.
I
And there
love it.
is no waiting period for you
Yeah.
on that. And Steve, we always have to remember the 3x3. And
Mhm.
don't forget, if you run across any friends, family, or coworkers looking to buy,
I
sell, or
love that.
refinance, we'd be happy to take care of them and do an annual mortgage review. Even if we didn't do their mortgage, we could still help them.
Hey, and look, but because you were telling me we already pulled two out referrals to send
Yeah.
back to our agent. And
Yes.
what I loved about this too, and I know we only have a couple minutes left, so we'll continue the conversation next week on the podcast, because I want to keep bringing the results, because I think this is I mean, it's the Trojan horse of a strategy this year. So, hey, but we took two relational leads back to our top producing agents, and you were able to touch the lead or touch the past
Yep.
client and call the agent and say, hey, Andre, we just want to let you know we're doing our annual mortgage reviews and we were able to extract 2 referrals.
And yeah, and it was funny because when I called him, I had the temptation to text him because
Yeah.
man, I've been calling this guy like 4 times this week. And
Yeah.
it was funny because I had that temptation to be like, I'm just gonna text him. I keep
Yeah.
calling him. But then I decided, no, I'm gonna
I'm going to
call
call
him.
him.
I'm
Yeah.
gonna call him. And what did he do when he picked up the phone? Because, hey, Sarah.
He
And
is
he said
all
he was
giddy. My brother's
excited.
excited.
And
What, you
I
got another
go, I
relational lead for
said,
me?
I said, Andre, are you getting tired of hearing from me? And he started
Yeah.
laughing. He's like, absolutely not. And I said, I didn't think so. I got
Yeah.
another lead for you.
Oh,
And he was over the moon. He was
oh,
like,
for
oh
sure.
my gosh,
And
thank you
he's one of the
so
top
much.
producers in their in
Yes.
all 4 of their
Yes.
offices. And these are some of the people that they referred to us originally. And it
Absolutely.
makes that stickiness and the real conversation we're having with our Focus 40 qualified agents of the real-time referral. It works.
It works. And
It
then
works.
on top of all this, when I made my calls on Friday or on
Yeah.
Monday for my Focus 40 and my Thor's Hammer, I plugged this. I told them what I was doing.
Yeah.
I was like, I don't know if your current lender is
Yeah,
doing
if your
this,
old
but
lender does
if
annual
you're old
mortgage
one,
reviews, but let me tell you, hey, and that's the beauty of it. Like this next week when you do
yeah,
your Focus 40 calls, the qualified, it's, hey, I just want you to know I was able to extract 2 relational leads from clients that closed and bring it back to the agent who originally referred it to me. Who do you have today that I could help you get pre-approved? Look, once they go
absolutely.
into our pipeline, we have a process to prospecting. And what if you could have an annuity type business? I love
Mm.
that.
Oh
Like, what if
man,
you could
he loved it.
annuitize your business? What do you mean? Well, I just sent 2 back to the person that just sent them to us. And I promise you, his average commissions, Andre sells good property homes. I mean, I bet his average commission's 12, 15 grand.
Absolutely. Yeah. And he didn't know that this person was looking to sell his
No,
house.
no,
And this
because they're
was
not
a,
following up.
they're not
And
following
that,
up.
yeah,
Yeah.
you killed it. Hey, well, listen, I know our time's up. I
Yeah.
am so excited about the strategy.
Me
Listen, if you're
too.
listening today and you want to know more, connect with us at the office, freedomplanningcall.com, freedomplanningcall.com. And our team at the Mortgage Marketing Animals will give you the process and some of the scripts we're using and the 3x3 and how do you extract relational referrals. You've heard the real-time referral. And let me just encourage you, book a call and we will invest the time. Myself, Carl White, Frank Garay, Kristen Simpson, one of our team members will literally, we will walk you through what it looks like to have a business so that this can be your best year ever. Freedomplanningcall.com, freedomplanningcall.com. Hey, and also, if you're listening and you've not given us a review, give us a review. Go to wherever you consume content. Give us, we'd love an honest review. It helps us in the rankings, helps people find us in the podcast. So go where you're at, hit a review. And I'll tell you this, if you'll send a snapshot of that to support at themarketinganimals.com, support at themarketinganimals.com, say, hey, I want a tumbler. We'll send you one of our Marketing Animals tumblers for that review. So a little bit of a bribe, but we'll give it to you, put it in your hands. We'd love a review wherever you consume content. Sarah,
Yes.
gangbusters.
Yes.
I am so
Exciting.
excited about this strategy and so grateful for our friendship with Greg and the other members at the Freedom Club. And that's why we're a part of such a great coaching organization. And his conversation is leading to a transformation, not only in our business, but in the business of the loan officers that are in our branch and the network that I'm running, and also the loan officers that are listening to this podcast. Stay tuned, because over the next couple of weeks, Sarah and I are going to keep popping in, just bringing the results of what we're doing, but also figuring it out. You know what's so cool, and I love that. Clarity comes in action. And that's what I want every listener to be listening to is, hey, we didn't have the plan perfected. Talk to a buddy of ours. He's doing something really cool. Sarah and I said, we're going to implement it. Sarah started making the phone calls. We helped build the structure of what are we going to call it? What's the next step? Doing it a little messy. And in doing it, seeing big results. And that's what I want you to hear is you don't have to know what to do. You just got to take action. And so
Yes.
everybody, Sarah, thank you. So cool.
My
Great
pleasure.
results. We're going to continue it next week. But listen to this, anything worth doing is worth doing badly. You just got to get started. Get started this year. Have great success, great results, and we look forward to seeing you on the inside. See ya.